First, I will start with introduction. Accounting is important to business for several reasons. There are some key reasons accounting important. For example, financial records help to track business financial transactions. Furthermore, accounting provides performance evaluation to help assess profitability, efficiency, and liquidity. This information will help business owners to identify strengths and weaknesses, make some adjustments, and measure progress. Accounting assists to making business decisions. They provide quantitative data on revenue, expenses, assets, and liabilities. Accounting also helps to create budgets and forecasts. By looking at financial data, identify trends, and estimate expense in future, accounting also makes realistic financial goals and develop strategies to achieve their goals.
Okay, we move to profit and loss. For the year ended 31 October 2022, the total sales in October for our company is 139,000 ringgit per share, and the depreciation expense for October is 20,000 ringgit per share, and the total rent is 15,000 ringgit, and the utilities accumulated ended of the month is 5,300 ringgit, and the total salaries and wage for workers is 6,090 ringgit. The total sales minus all the expense accurate, we have the total net profit of 91,500 ringgit. This profit and loss statement ended in October is a positive curve to company to make growth in the next year.
Today, I want to present a balance sheet to Dynamic Electronic Enterprise Company. This is the balance sheet as at 31st October 2020. In this balance sheet, there are non-current assets and current assets, also current liabilities and owner equity. For non-current asset has a computer and additional equipment. To get all the amount of non-current asset if with computer is 100,000 ringgit minus additional equipments 20,000 ringgit and will get 18,000 ringgit. Anyway, for current asset has a account receivable, cash and accumulated expenses. To total the amount of current asset is account receivable is 52,000 ringgit plus cash 544,600 ringgit plus accumulated expense 22,000 ringgit and get 616,600 ringgit. For current liability have a account payable only, that is 5,600 ringgit. For the owner equity has a capital, net profit and drawing. The amount of capital is 600,000 ringgit and the amount of capital should be placed next to the credit space. For amount net profit is 91,500 ringgit and drawing is 500 ringgit. The net profit have to minus the drawing 500 ringgit and get 91,000 ringgit. To get all the total amount of the owner equity is capital 600,000 ringgit plus the amount of net profit and drawing and get 691,000 ringgit, and that is about balance sheets. And I think that's all from me. I leave the presentation to the next ones. Thank you.
I want to talk about the usefulness, the statement profit and loss. An income statement is one of the three important financial statements used for reporting company financial performance over a specific accounting period. The other two key statements are the balance sheet and the cash flow statement. The income statement focuses on the revenue, expenses, gain, and loss of company during a particular period. This is also known as the profit and loss P&L statement. Income statement assists business owners in determining if they can make profit by growing sales, decreasing costs, or both. It also demonstrates the effectiveness of the strategy that the company established at the start of a fiscal terms. This document can be used by company owners to determine whether or not their tactics were successful. Based on their investigation, they can devise the best strategies to increase profit. This financial statement is used by two types of people, which is internal users and external users. Internal users include from management and the board of directors. They can utilize this information to enhance the company position in making choices in order to turn out a profit. External users include investors, creditors, and competitors. Number 1, investors. Investors assess whether the company is well positioned to develop and profit in the future before deciding whether to invest. Number 2 is creditors. Creditors use the income statement to check whether the company has enough cash flow to pay off its loans or take out a new loans. Number 3 is competitors. Competitors use them to get the details about the successful parameters of a business and get to know about areas where the business is spending an extra bit. For example, R&D spends. The income statement can be useful financial statement to assess their performance in implementing short-term and long-term goals. There are reasons for this statement, which is evaluate past performance. The company can use this evaluate their performance in achieving business objectives. For example, if your company goal is to increase sales by 20%, the company can compare the current sales statement to assess if you achieve this goal. Number 2. Predict future performance, which is income statement of the past year to perform a trend analysis. For example, by looking at how income and expenses move through the years, company can predict growth and decline by looking at change in income and expenses amounts. Lastly, is assess the relationship between future cash flow and revenue. Company can still use this statement to assess the relationship of revenue with cash flow. For example, the company can compare income from operators with the operating cash flow in the cash flow statement. In this comparison, the company can analyze the spend at which operating income become cash. The P&L statement provides a company insights of how your company is performing financially. Regular tracking and analysis of P&L statement can help you better understand how your business is performing, which expenses are generating a return on investment and which are getting into profits. As the saying goes, knowing is half the battle. Knowing where you stand through accurate P&L reporting can mean the difference between successful and failure for any small business. An income statement is a valuable source of knowledge about the important elements that contribute in its profitability because it is generated considerably more frequently than any other statement. It is provides you with rapid updates. An equation can be used to determine a company net profit profit or loss for given time period will show the expenses, income gain and loss from the income statement into the equation. This information help you make timely decision making necessary to maintain the financial stability of your company.
A balance sheet is a document that displays a company's financial situation. There are two types of balance sheets. It is both an account form and a report form. Non-current assets and current assets make up its two sections. Knowing a company's financial status, including its total asset, liabilities, and equity for a certain account period, is the goal of the balance sheet. All current assets are included in asset, and non-current assets of the entity are covered, while the head of equity and liabilities will consist of shareholders, equity, and all current and non-current liabilities. A balance sheet or balance sheet is a statement of the financial position of an individual or organization in financial accounting, regardless of whether they are a sole proprietorship, partnership, corporation, private enterprise, or other organization, such as a government or non-profit. It is common to refer to a balance sheet as a picture of a company's financial position. The balance sheet is the only one of the four fundamental financial statements that pertains to a specific moment in the fiscal year. Equity, net worth of firm. Equity is the difference between asset and liabilities, and per the accounting equation, net worth shows equal asset minus liabilities. A standard corporate balance sheet is divided into two sections. Asset on the left and finance, which is separate into liabilities, and equity on the right. Liabilities are listed after asset. Total asset equal liabilities, and equity is another way to look at the accounting equation. Assets are often listed in one section of a balance sheet, while liabilities and net worth are listed in another, with both sections in balance. This approach of looking at the equation allows us to understand how assets are financed. A business that accepts cash exclusively can calculate its profitability by deducting all bank balance and cash on hand at the conclusion of the accounting period. The owners of this business frequently do not take all of their initial capital and profits at the conclusion of each accounting period, since they own their suppliers and taxing authorities money. In other words, even if a corporation has assets and want to convert them into cash at the conclusion of each fiscal period, they cannot be converted into a cash right away. In conclusion, you will be able to manage your own finances more effectively with some accounting knowledge under your belt. You will gain deeper understanding of what goes on with your personal finances and learn important skills such as how to effectively track expenses and work within a budget. Second, applying the accounting subject in business is essential because it provides in-depth information to the whole picture of the business. Last but not least, accounting not only helps an enterprise to conduct its day-to-day activities smoothly, but also helps in its future growth. At the same time, financial statements produced by various accounting systems are used by multiple stakeholders to make economic decisions.